Hey guys, today I'm going to talk about the top 5 deductions that you will receive as a business owner that you can't receive as an employee. The first one I'm going to talk about is what's called the qualified business income deduction. And this was new starting in 2018. And essentially what this is it's a free 20% deduction right off the top for qualifying income. And qualifying income generally includes income that you'll earn through an LLC, an S corporation, or as a sole proprietor filed on your individual income taxes. Now, there are limitations, and there is certain income and types of businesses that don't qualify for this. For the most part, most businesses qualify, including most rental real estate. The only real rental real estate that doesn't typically qualify is like triple net leases. Those won't qualify. But as long as you're managing a property or you're paying someone to manage a property and the landlord has obligations, it's not just the tenant that's taking care of everything for you and you're just sitting back and collecting a check, then it probably qualifies for this deduction. So that can make a pretty big difference. And I can go into more detail in another video to talk about some of the limitations and how to take advantage of and maximize this deduction. The second deduction that you can get as a business owner, but not as an employee, is auto expenses. So as an employee, when you commute from your home to the office, you don't get any deduction for that. You also don't get any deductions if you go and visit a client or something. You have to rely on being reimbursed from your employer if you want to make up that cost, because employee expenses are no longer allowed ever since the 2018 Tax Cuts and Jobs Act. So you don't get that as an employee, but as a business owner, you actually have a couple options when it comes to auto expenses. First, you can either take the standard mileage rate, which is 65.5 cents a mile for 2023. Now, keep in mind, this does not include commuting from your home to your main place of business, but it would include visiting clients or doing other things when you go from your office to some offsite location and back to your office, or doing longer travel for business. You could take auto deductions for that. So that can make a pretty big difference and help subsidize the cost of your vehicle. Alternatively, a lot of times actual expenses, which is the second method for auto expenses, may end up higher. And this is where you actually calculate depreciation on the vehicle. So you take the cost and you can depreciate it. And most vehicles these days will also qualify for what's called bonus depreciation, which means you may be able to write off a significant part of the vehicle or all of it, depending on the year and circumstances. So not only do you get depreciation for it, though, you can include all of your other expenses. So if you have a loan on it and you have interest expense, you can take that, your gas, your insurance, your registration costs, any maintenance that you're paying. You add all of that up at the end of the year, and then you figure out your business use percentage. Your business use percentage is the total amount of business miles you drove for the year divided by your total miles overall, including commuting and personal miles as well as business miles. Figure out that percentage. So for example, if you drove 5,000 business miles and your total miles on the vehicle for the year was 10,000, then that would be a 50% business use. And let's just say that your auto expenses were 4,000 for the year. Well, you would take 4,000 times 50%, which was your business use, and you'd take a deduction of $2,000 for the cost of your vehicle during the year. So that you only receive if you are a business owner. You're not going to get that as an employee. Third deduction that you receive as a business owner is the home office deduction. And this is when you have a dedicated space in your home that you use only for business. And there's two methods that you can use for this also, kind of similar to auto expenses. You can either do the simplified method, which is where you figure out the square footage of your dedicated space. So if you use a separate room, you figure out the square footage and you take a $5 deduction per square foot up to 300 square feet. So this maxes out at $1,500. and you take that as a deduction for your home office. And this is meant to include essentially the cost of maintaining that space, whether it's the mortgage you're having to pay or the rent you're having to pay, utilities and things like that that are allocable to that business use portion. Now, alternatively, you can use the regular method. And the regular method a lot of times might actually give you a bigger deduction, but it requires you to keep more documentation and do a little bit more math. So if with the regular method, similar to auto expenses, you would figure out all your costs associated with the home. So you would calculate depreciation on the house and just take the square footage for the office that you're using. So if you say had a 300 square foot office and you had a 3,000 square foot home, basically 10% of the depreciation on the home you'd be able to actually deduct for your home office. And then you'll figure out all your utilities, your internet, any maintenance costs that apply to the entire home. Like if you had to do some roof work that incorporated the entire square footage, then you take your portion of that. So you figure all your expenses and you multiply it by the percentage of space in the home that is used for an office compared to your total square footage. So there's a lot more that is required of you, but oftentimes that's going to result in a bigger deduction than the simplified method. The fourth deduction that you receive as a self-employed person is health insurance deductions. So typically, as an employee, if you have medical expenses, whether that's health insurance or maybe it's doctor's visits, things like that, you have to take those deductions, what we call below the line, which means it's an itemized deduction. And what that means is essentially that it's subject to a lot of limitations, which I won't get into specifically, but most of the time they end up getting disallowed. Unless you have incredibly high medical expenses, most of the time you're not receiving any benefits from those expenses as an employee. However, as a self-employed individual, you get to consider your health insurance essentially as a business expense. So you get now a above the line deduction. You get a specific deduction that's allowed for self-employed individuals for your health insurance. And the last item that you receive as a deduction as a self-employed person that you don't as an employee is any type of supplies or equipment that maybe your employer wouldn't reimburse you for. The exception being for teachers, they do get a small amount that they can write off, but not enough to really make a difference. But as a self-employed individual, let's say you needed a electronic notepad or a iPad or something like that to take notes or maybe to do email on, but your employer wouldn't have reimbursed it to you because they've already given you a computer or something else. Well, if you're self-employed, you can buy that iPad, and if it's used for business, then you can take a deduction for it. So as you can see from these 5 deductions, the IRS definitely favors self-employed over employed individuals and incentivizes people to start businesses. If you're thinking about starting a business, talk with your CPA and figure out if any of these deductions or any others apply to you. The other strategy that can become important here is it is possible to be employed and also start a side hustle or another business. And as long as you truly have an intent for generating income and you treat it like a business, then you could actually take some of those deductions and still use them even though you're employed because it's a separate business. Now, there are other considerations, so you'll definitely want to look out for other potential pitfalls like hobby loss rules or other potential increases for audit rates, and you'll want to make sure that you have great records. The point is that there are a lot of benefits for self-employed that you're not going to get as a employee. So I hope you found that useful, and I'll see you guys in the next video.